sending money back home to my grandma was a massive problem. I said there must be a way we can, kind of fix this. There must be a better way.
Welcome to the F Squared podcast. This is a show where we explore the people and ideas shaping the future of financial services across Africa. We are sitting down with Stone Atwine, CEO of Eversend. Eversend has gone from a consumer fintech story to building infrastructure that sits underneath cross-border money movement.
So our first foray into stablecoins was basically for efficiency.
In this conversation, we will explore who is using stablecoins rails today, what corridors are driving real volume, how incumbents should respond, and how stablecoins might ultimately coexist with traditional systems like SWIFT. If you care about where money movement in Africa is heading, this is a conversation you'll want to follow closely. But I struggle to accept that a global money system will be backed by two private companies once the banks come in the game. Stone, man, so good to meet you. And it's Stone Atwine, not Stone Atwine, right? It's a Bantu name. So I hear you and a lot of podcasts calling Stone Atwine. I'm like, who is that? Is that a different Stone? But yeah, good to have you on the show.
Thanks for having me.
Yeah. I want to set up with your journey in Eversend. You're one of the OG fintech builders in Africa. You've been speaking about unit economics, in 2021 in the hype years when nobody even knew what unit economics were and what sustainable businesses meant. And so, before we get into the meat of the discussion, which is going to be stablecoins and how you see them, permeating through the ecosystem and all that kind of stuff, probably just start us off with your journey into Eversend and what you've been up to for the last few years.
Yeah, it's interesting because it actually starts out in Nairobi, in Kenya. I used to work in Nairobi, and sending money back home to my grandma was a massive problem. We had M-Pesa, we had MTN Move Money, and all these things, and I had to send money to my grandma every month. As a lot of the immigrants, we have to pay black tax.
Yeah.
And I think the biggest issue for me was that I had to go to my bank, withdraw money, drive to a branch that has Western Union or MoneyGram, put in my Kenya shillings, then my grandma gets the money, but she has to get on a bus for about 50 minutes to go from her farm to a money transfer agent. And this used to really piss me off. And I said, there must be a way we can, kind of fix this. So I sat there in Nairobi. I talked to a few friends and we built the very first, my first foray into fintech or into cross-border payments or remittances. We built a website called remit.ug that used to take money out of your debit card and deliver it to MTN mobile money.
Got it.
So my whole game was around how do we use mobile money. And then my grandma, goes 5 minutes outside her farm and cashes out.
Yeah.
So that's how we begin. I built that. It looks serious. I actually leave Nairobi, go back to Uganda, resign my job, and start building. So we built that, got to about 20,000 users. I was with a friend of mine called David, who was doing the tech stuff. Another friend of mine called TMS, who was actually based in Texas, but who was also facing the same problem. And we built that to about 20,000 users, and it kind of starts breaking. So the tech is not great. And also being in Uganda, it was a bit difficult to fundraise and do all these things. So then I moved to France, and I was invited to Paris as part of a program called French Tech Ticket, which is basically a program that invites or attracts outstanding entrepreneurs to build their businesses in France. And basically all these economies are looking for people who can create jobs. So they invite me, I go over there, And actually, I was looking at Mono's exit recently. I'm laughing because I used to be, me and Abdul, the founder of Mono,
Yeah.
used to live. I don't know, Abdul probably remembers. We used to live in a little place outside Paris called Bondy
Yeah.
in
Yeah.
student accommodation. And and we used to have these little beds. Anyway, we
Yeah.
start there, and that's how we decided to build Eversend.
Yeah.
Now, ever since we start again, I start a new company, we get a new team. But my whole idea had been, I'd been watching what had been happening with, remittance companies. Everybody is sending money from the UK or the US to Africa. Everybody is thinking like that. And there was a think tank out of, I think, Joburg or Cape Town, out of South Africa, called Send Free. I think it's still there.
Yeah.
And they had these super interesting numbers where they were showing that intra-Africa transactions within the continent were like 11 or 12 billion, and they were very, very expensive per year. And then I looked at everybody fighting for this 90 billion. I don't remember the number at that time, maybe it was like 60 billion coming from the US and Europe.
Yep.
Fighting for that thing, and you have World Remit and you have Sendwave and all these other guys who come. So I said, let's focus on Africa, intra-Africa. That's how we started. The second thing, I think, just as I complete this kind of introduction of how we get here, was I also realized that every time somebody goes to Silicon Valley and raises a new round, we all suffer because we have a new competitor who's reducing price, cutting off all FX, and FX is our revenue.
Yeah.
And the user basically wants cheap money. So as soon as they know that my money is going to be delivered, they want cheap services. So it was a race to the bottom, and I made a decision there and then and said, I'm not going to rely on this as a business. Cross-border transfers is where our bread and butter is, yes. It's how we meet the customer, but we have to offer them more. And therefore, we started thinking, building a multi-currency wallet, building virtual cards, building crypto, building stocks, which we started to build, which is not live even up to today. And all these things. And therefore, the journey has just gone like that. So just again, as a quick intro, born and raised in Uganda, worked across Africa, have done a lot of work around consulting for financial services, for banks, for telcos, especially around using technology to do credit. So those are the things of loans. And basically, I think my last 10 years have been focused on cross-border payments, although with different organizations.
Got it. And I downloaded the app. What is it? 2021 now is 5 years ago. I was actually doing a bit of transactions with it. I think I was in Burundi at the time, and loading my wallet, sending money across, mostly Uganda. I was sending someone from UK was sending money, and I was also sending the money, just trying it out. And like that consumer proposition, how has it evolved over time? Where are you now compared to where you were at the time? And specifically because, like, with a lot of these apps, the way they were being used at the time was like, as you said, people are just hunting for bargains, like the lowest cost, and people also like tourists just going to your app, moving out, not sticking, not using it. And it's sometimes, even with some of the new guys who are coming in terms of like cross-border global money mobility kind of theme, like, where are the sticky users? Who are the guys who keep coming back? And like, have you found that sweet spot?
But I think it has to do with mostly around user experience. So we've recently been having conversations with customers who are like, yeah, I know this guy is cheaper, but it's just so stressful for me to use their app. I think that's one key thing. but also we have a lot of Africa is an interesting market, and you really, really have to take time to understand it. And I say this all the time. I even say it to other founders and potential investors. That someone like us who has started and gone through the market has a massive advantage, because there's so much you have to learn that you cannot learn it in, in 1 year, 18 months, 24 months.
Yeah.
It's just, you have to pay the tuition. So if you're starting today, you still have to go through all the lessons and understand where is the money. So like you were saying, we have these tourists in the market. There are people who come for the referral bonus. Which, a referral bonus is something that works brilliantly across let's say Europe and the US. People invite others, they come. In Africa, it's a different story altogether. So we had issues where people are forging identities, people are going to markets and recruiting women because we're giving $1. And somebody actually makes it his job to sign up 100 people that will never come back to the app, but he gets $130 that day. It's a lot of money in the market. Small things like that. So a lot of tourists, a lot of customer sharing. So the same customers we have are the same customers on the other app, and on the other app, on the other app. And they have a virtual card at Eversend and a virtual card at another institution. And so that's the problem. So you end up competing for pricing and margin. But we found that there is specific advantages structurally that at least we have, and I think everybody has their own advantages. So one of the advantages we have was that we came from a mobile money market, coming from Kenya and Uganda. So we had deep understanding of mobile money as something to build for. And then bank accounts, everybody has bank accounts, the infrastructure is different, but everybody has bank accounts. So I have an advantage against like a Nigerian founder who may have the same access to investment, who may have the same access to building tools and talent, the same access to infrastructure, because I have a deeper understanding of financial services in Africa on a broader level. It's not easy for him to understand mobile money. It's easy for me to understand banking or banks or whatever infrastructure is there. So what we have found is that it's very difficult, for example, for a Nigerian fintech app to expand across Africa. And this is where a lot of people kind of discount the importance of what I call founder market fit, understanding your market really well. Someone in Kenya, what we find, which is very interesting, is that Kenyan founders, for a long period, kind of stopped innovating because they'll just say M-Pesa was so strong that they'll just say, oh, but M-Pesa does that. Even now, if you go and say, hey, here's Eversend, in Nairobi, some of the stuff we find is, oh, but M-Pesa does that. It's almost as if M-Pesa gave people permission not to build. And then, so back to the users themselves. We have found people who are doing business across borders. We have found people who are trading, even trading currencies, digital currencies, not necessarily on Eversend, but somebody in Ghana has Ghana CD, and someone in Kenya has a digital currency that they trade somehow through their trust. They make a trade, and the fiat transaction is done through Eversend. The digital transaction is done outside, maybe on the blockchain. We found a lot of those. We found people who are doing business across borders. We found a lot of people who are doing local business. The biggest merchant, I think, on our platform is Facebook, Meta. And these are people basically paying bills
Yeah.
for adverts. So a
Got
lot of traders,
Got it.
um,
Got it. Got it. Got it.
those people stick around, but they stick around because you have a product that works.
Yeah.
It
Yeah.
has to work.
Yeah.
Yeah, and the user experience has to be great.
Yeah. I mean, those are just like the fundamentals, right? Like, money anxiety, losing trust with people, especially, when you're talking about like, that those women in the market. I remember my first ever job. Like, I wasn't doing the job because I needed the money, but I was doing the job because like I needed to spend time doing something, and I was earning like around $2 a day. That was like minimum wage. I was working at my friend's dad's company,
Yeah.
and that just showed me like, listen, there's an entire world out here. People are making $2-3 a day, right? And that $2 has to buy food, has to be saved, has to like that was minimum wage all those years back. And so when you say like, a $1 like referral bonus, even a $2 referral bonus, that is a day's wage.
Yeah,
Like
exactly.
that's that's a day's wage, and it's gonna make a huge difference for someone. So it's like a completely different context. But now getting back to like the meat of our discussion, like I remember us talking about stablecoins back in 2021, my first iteration of Frontier Fintech, and I was saying like these things are real. In fact, the biggest use case I see for crypto in Africa is stablecoins because it helps people move money around. I think at the time everyone was so focused on Bitcoin, and so they were looking at stablecoin as like, that's just still fiat. It's not proper crypto. But I think the vibe has shifted so much now, and they're like really, becoming mainstream. But I want to understand like what was your first now interaction with stablecoins, especially from a cross-border perspective as Eversend, and like what are the first efficiencies or cost savings or use cases that that got you thinking as stone, like wow, like not necessarily bet my company, but like I really need to take this thing seriously.
Good. Yeah. So again, I think understanding the market is very, very important. So I like to get deep understanding of concepts. So I knew, and we could see that moving money. So we had a US bank account, we had a French bank account, we had bank accounts in Nigeria, in Kenya, and moving money for our treasury meant sending money from, let's say, the US and waiting 2-3 days before you get to Uganda. Meanwhile, float issues. So you need money in Uganda, you need money in Kenya, you need money in Nigeria. Money needs to keep moving constantly. And I was using stablecoins, just doing my own, trading, doing a bit of crypto here and there, and looking at this problem, and I was like, no, there must be a better way. So our first foray into stablecoins was basically for efficiency. And the decision I made then is actually why we are alive. Because I don't know if you know, but we haven't raised a ton of money.
Yeah, I know. Yeah.
We raised just $1 million. I'm not even sure if we raised $1 million or 1.2, something like that, but somewhere in there. And we really had to optimize velocity, to optimize efficiency. And I did not want to keep running back to investors every time. Every 6 months, I see people raising money all the time. So I looked at stablecoins and I was like, okay, I'm in Paris. I can move stablecoins to somebody in Uganda, so I'm not using Swift. No. So then we decided to use that internally within our own platform. I think we started using Fireblocks in when they were very new, I think, maybe 2020. I'm not sure about the real dates. And so we started seeing efficiencies using our own treasury management. And internally, I started, coming up with things, just-in-time funding. In 2021 is when I wrote a tweet thread called "Stablecoins are the future of cross-border business payments" or cross-border payments.
I remember that.
Yes. So in my head, I was like, okay, if you're in Kenya, you're in Nairobi, you want to send money to China, how do you send money? You go to your bank. Remember what I told you about my grandma in the beginning?
Yeah.
You go to your bank, they give you a form, which you're not even able to do this most times in your app. Then you start filling the form. What is this? What is the correspondent bank in New York? So they get your Kenya shillings, they flip it. When they flip it to US dollars, you lose money. But why is it being flipped to US dollars? You don't know. They send it to New York. Your bank in Nairobi has a correspondent bank in New York, and the recipient's bank in China has a correspondent bank in New York. Those guys also first go to the money and take some fees. Then they exchange it again, and then the money eventually arrives in China. 3 days later, if you're lucky, 5 days later, 7 days later, sometimes you don't know where the money is for a very long time. And many times something comes up where banks ask questions. Why is this money coming? Why is this money coming? So you're stuck in this never-ending chaos. Now imagine someone trying to run a business. And I said, I can send stablecoin and it goes instantly. And all I have to do is to look for a local partner to turn that stablecoin into local currency, to off-ramp it. That's how we start. We start using it as Treasury. Then I said, this is how we are going to actually help move money across borders for our own customers. We start using it internally by putting the infrastructure, by building with Fireblocks. Then we start allowing customers to fund their Eversend wallets using stablecoins. And basically, we've been moving since then. The risk of depending on banks is a little too extreme for me. The cost is ridiculous. The time is ridiculous. So it was mostly as a result of trying to be more efficient in our treasury, and now it has grown into actually building the infrastructure itself.
And is it like the primary way you move money around for all your customers now? Or, if you look at it like 50-50 Swift, 50, like what is it?
We actually don't use Swift anymore. Swift is only used if someone else is paying us. So some processors, like someone may process cards for us and settle us with Swift, but that is also changing. But internally, we don't use Swift anymore at all.
So like all your internal treasury transactions. So for instance, let's say, and maybe just to make it like concrete for the listeners, you'd keep accounts in multiple countries, let's say Ghana, Kenya, etc., right? And those are the accounts that you'd use to kind of settle someone. So if someone is sending money from Kenya to Ghana, for instance, you just get the message, remove money from your Ghana account and send to the person who was supposed to receive the money, right? And so this meant like every time you'd need to know, okay, we need $50,000 in Ghana, we need $100,000 in Kenya, we need like $80,000 in Nigeria. And that would mean like your treasury guy is always sending money every other time. You'd have to know like next weekend, maybe it's Easter, transactions are going to shoot through the roof. And so like, let's just keep extra cash in all our bank accounts. Where do we even get that cash? So that was the problem, right? And that meant like Swift costs, delays, and the downstream effect of that is like even in terms of your user experience, there are risks, because what if there's a Swift delay and we don't have money in Ghana and all of a sudden our payouts in Ghana are like stuck? So you say, to hell with all that, we'll replace stablecoins. Now, when you're talking about just-in-time financing, maybe walk us through now how stablecoins work in terms of that just-in-time financing.
Yes, so I'll break it down in 2 levels. So let's say 3 levels. Level 1 being what you just described, which is there's let me go deeper and say 4 levels. So level 1 would be internal matching, what Wise made popular, which is keeping funds in different jurisdictions, so no need to move money. That's one. So that's traditional. That one is there. We have money, we will pay with that money. And that's kind of the start. On top of that, then you have the Swift thing, which we have now plucked out. Which is very inefficient, using banks to move treasury around. Then we got to treasury rebalancing or treasury management using stablecoins, which was the level, or which is the level that we use today as well, which is instead of keeping, $1 billion naira or so much Kenya shillings or so much Uganda shillings, we keep a lot of, say, USDC. And then we don't have to run around, sending money here and there from Nairobi to Accra, from Accra to Lagos, from Lagos to Kampala. But what we do is that we have a central point where we just fund as money is needed. So you know that today we're going to do X in Kenya, but you have a buffer. So you send X to Kenya. Easier treasury management. You don't have money sitting in Kenya when you need money in Nigeria. When you need money in Nigeria, you send to Nigeria, you have local partners to do the off-ramp, and you get local currency in. It's a process that could literally take us 30 minutes, from the previous 5 days, 3 days. And so that was what we used for treasury management, and to reduce our need for float and our need for capital, because we became very efficient having this central stablecoin bank internally, right? Which then takes us to an even more interesting level, like the infrastructure we have built now, APIs that allow what I'm calling just-in-time funding, but this is not just-in-time funding for treasury. This is just-in-time funding for actual transactions. So what do I mean? We have an API that we can give to somebody, like in, let's say, a payroll provider in the US or in the UK, or Airbnb, or whoever makes big payments into the continent. And that API, when they hit it, it gives them a few things. It gives them a quotation that has an exchange rate. So you just tell it, I want to send 20,000 Kenya shillings to Nairobi, okay, to this person. It comes back with a quotation. The quotation says, you want to send 20,000 to Nairobi. This X is what you have to send us. That X includes the money to exchange. This is the exchange rate. And if there is a fee, there's an extra $1 on top of it. So you will have to send us, let's say 300 or 3,000. I don't know the numbers in my head. You have to send us X. We get that. Then you come back and you say, okay, I would like to do the transaction after seeing the quotation. You have not given us your money to keep, like, your Kenya shillings to keep for you. When you confirm the transaction, we give you back a webhook that says, on this address, send us X USDC using base, or X USDC using whatever network, right? And we keep listening for that transaction. Let's say we can tell you it's going to be alive for 5 minutes. And the moment, so you go internally on your end, you trigger USDC to our address. We get your USDC and we immediately make the payout for you. Now, what does this do for a remittance company, a payroll company that just wants to send money? Remember what we said, where a remittance company has to send 5 million to Nairobi, to Kenya, look for a deal of an exchange rate, which exchange rate could change tomorrow. Then have 5 million seated in Kenya, then 3 million in Uganda, 10 million in Nigeria. So by the end of the day, you have 300 million seated in all these places across the world. Money that could be earning yield, a lot of yield, money that could be doing other things. So our proposition to these people, to these companies is, no, don't send us that money. Just use our API. We'll give you a quotation that is live. Send us per transaction the stablecoin to fund that specific one transaction. And we will deliver it as soon as we receive that. That's the level 4 now, where we find ourselves. And this infrastructure, because we built it internally and all that kind of stuff, now we want to sell it. We are now actively trying to sell that infrastructure. And it goes even beyond that. So I will just quickly run through, I think, some of the other things that we see, the use cases. So
But before, just keep that in
yeah,
mind before you get in the use case. Like that's that level 4 is a very interesting one, and there's this discussion of like making real time payments, especially using stable coins. One of the things is that there's an argument that it could be more costly than if someone brings scale and just nets off, right? The amount of money that needs to move across borders, if someone is bringing scale and using like some netting off thing,
yeah,
is like less, right? Or could be less. Have you seen that in this
yeah,
market?
yeah,
And do you
yeah.
think like there's,
Even
yeah, yeah,
yeah, even internally with us, it's a very, very valid uh, uh, discussion. Right? Two ways to look at it. Number one, so for example, what we've done is that because we give our customers wallets, so if you're also doing collections from Kenya, for example, or Uganda, for example, you will still have your KES. You can still pay out.
yeah,
So for us, we've done it like in a hybrid way. But you're very right, and we've been having this discussion with one of our partners, where we see that we are losing money in if every single collection is settled, and then we need that currency, especially since it's settled in USD.
yeah,
That's the problem, really.
yeah,
And we may need that currency 2 hours later. So why are we doing the exchange? But I think the use cases are different. While Remit is not doing collections in Kenya, for example, so this works perfectly for them if they want to use it,
Got it.
or a remittance company.
got it,
Deal or any payroll company is not doing collections in Nairobi.
got it.
So this works. But even for people who are doing collections within Africa, we have an option for them to actually pay out from their own collections, but be able to fund just in time. Now, if it's the only thing you're providing, I've already seen, and I think that it's going to be a problem for people who are doing the back and forth, who need to net off down the road. But I think those solutions are going to come as we go. We are already seeing it with some of our partners. And I think, let me just jump to one specific thing, which is how I like to build things, is I don't want to solve all problems today. It's very important not to get lost in problem solving. A lot of people, they start solving that problem before they have it.
Yeah.
So what we do is first we do this integration, first we do the business. It's faster, it saves people money because people like to hold on to their money actually. So there are very many people who will say, if it's a 0.3% or 0.4, 0.5% hit, I would rather keep my money as opposed to giving it to a provider, an aggregator in Nairobi, who may shut down tomorrow.
Exactly.
Someone shut down recently with our money. And so you see where I'm coming from.
Yeah.
When you add in risk, when you add in the possibility of earning yield on that money, when you add in all these things, the math is yours to do.
Yeah.
But at the end of the day, it may end up working. With that being said, I would prefer to solve problems as and when they come. I'm very sure we will come to a solution for this issue you've raised because we are already facing it and we are already thinking of ways to solve it.
Got it. No, it just it's kind of like the tension between some of the efficiencies of the old systems versus like what the new systems are bringing in, and like if it's gonna like really scale, then those are some of the edge cases that must solve. But let's look at like a situation where like I let's even look at it like a bank, right? Like you're a bank treasurer. And I was having an interesting discussion the other day, and some banks are now starting to look at stable coins because in Africa, like Swift is not for everyone. People talk about Swift is like everyone can just walk in and be part of the correspondent banking system. Like since the global financial crisis, a lot of banks were just kicked out, especially in parts of Africa. And what that happened is that you had a situation where you have like the big banks dominating trade and payments, and then the smaller banks having relationships, but not necessarily having the same access to rails, or even having access to those rails, but at a higher cost, because there's layers of like corresponding banks
Yeah.
that they have to go through. And now some of them are looking at, like, can we look at this stablecoin opportunity, and for some of our smaller trades, how do you go now building building those capabilities? Like, what kind of blockchain knowledge do you need to have? How do you start going into, do you choose Fireblocks, do you choose this, custodial, all that kind of stuff? Just walk us through like the things you need to know.
I think the easiest way to do it would be to, so for example, for banks, we're already talking to banks. I was in Nairobi recently, and in Nigeria and in Uganda, basically trying to sell this. People are, banks are welcoming, but still a bit not sure.
Yeah.
And there's also the idea that you have to involve regulators and whatnot. What we are seeing is there's a lot of interest. But like there's a question you asked, a lot of people don't know how to begin, how to start, how to, yeah. So the easiest way, I think, would be to just choose an infrastructure player. Let's say Eversend gives you our APIs, and Eversend says, our ask is actually very simple. We are telling banks, just do a pilot using our infrastructure, of sending money to the US. Or sending money to Europe or to the UK, and we are constantly adding on new currencies. So we give you that same infrastructure, plug it into your guys. We'll come, we'll sit down, we'll work with your people, and will make life very easy. There's another option, which is the bank to go and speak to Turnkey, speak to Fireblocks, speak to Chainalysis, speak to. There's probably 8-9 players that you have to speak to build something nice and secure.
Yeah.
And then also deploy technical resources internally to build this within your ecosystem. That works, but that takes more time. Now, some of the biggest banks in the world have already built this.
Yeah.
Again, we were chatting with the guys at JP Morgan in October or November in New York, and they've already built all this. We walked in, backed by the Mayor of London's office to go and try and sell these things. And, they've already built stuff internally. So some banks will build it internally. Some banks will use infrastructure players like us. A lot of people are already building. A lot of the local infrastructure people on the ground are already building APIs. I don't remember the actual companies, but for example, I know that Flutterwave as well is building the infrastructure. We've already built the infrastructure. Some of the traditional aggregators are also thinking through this. But of course, banks are going to be very specific and with who they work with. I think either way works, but the quickest way, if I was a banker, to try it out, if I was Equity Bank in Nairobi, I would say, hey, Stone, come here, come sit, bring your team, sit down with our guys, and let's solve this problem with the infrastructure you have. And don't send all your transactions through this platform. Do 10 to 100 to 1,000 to 10,000 transactions and see that it actually works, and then build on like that. I think that would be the easiest way. Building infrastructure is enticing, but I think it's a lot of work for nothing.
Yeah. And I think at the very least, maybe the thing they need to do, and I think the thing you guys need to do, is help them do due diligence, right? Like, just walk them through what because like they're gonna speak to many Eversends, but a bank will need to know what your stack is, right? So to know like what the failure points are, and it may be useful to be like, we'll just train you guys as an industry in terms of like what excellent looks like, what bad looks like, so that you can make a decision about us. Because I've always find like the latent barrier to a lot of adoption is people not saying, I don't know. So they just ghost you, and you're like, but just say you don't know, and I'll help you and understand this thing. So So yeah, very interesting.
And also, on that note, even for us, like the builders, a lot of people are now like very seriously building and adding corridors and trains and what. And I think if it depends on who you want to serve. So if you want to serve like small business, that's perfectly fine. But if you're going to build like deep infrastructure, what we should be doing is like boosting security. Like right now, internally, we're actually not aggressively building product. We're aggressively doing like frameworks, security frameworks. You know, SOC 2, Type 2, ISO 27001, because you're not going to sell to these global banks without thinking through those things. I actually went to Standard Chartered here in London and tried to sell, and they're like the list of things you have to check off. And this deal is going to take 2 years to close. It's just, so you're right. But some of these financial services players are not easy to sell to. But we have to get there slowly.
No, it has to happen. I think, and this speaks now to the next question in terms of like where, outside of your use cases, like where are you seeing like the volumes, and it's like, whoa, these things are going up and to the right. We've seen a lot of like B2B payments, like for suppliers, in markets where like liquidity is a problem. There was a lot of that growth in Nigeria a couple of years ago, and it's still going on. I think even in Kenya, surprisingly, like despite the decent liquidity, FX liquidity, like I think some businesses have just gotten used to the UX of using stablecoins, and I'm like, once I've built a trust, I can continue using them. Outside of those use cases that you see in your own treasury use cases, what other use cases are you seeing that are like really interesting?
The biggest one is definitely, it's one you've touched on. So that, like you said, we'll leave that on the side. But I feel like I have to comment that the biggest one is definitely cross-border trade. So importers, exporters. That's like massive. So you really have to play in that space. The shocking one, which we are actually just starting. So these volumes are not Eversend volumes. But it is something we see in the industry, is stablecoin cards. Cards based off of stablecoins. And how? So again, remember the efficiency thing we spoke about? So like these card networks are now very open to opening up their networks, so tech, to stablecoin as a settlement. Visa is already doing this. They have a partnership with Stripe, Bridge, with Rain, with all these guys. And there's very, very, very fast growth on stablecoin cards. So I issue you a card, Samora, you're in Nairobi, and on that card within the Eversend app, I give you a stablecoin address, which you can use at any time to fund that card. That's what we are seeing. We are about to launch those cards ourselves. You can still fund your Eversend cards today with stablecoins, but you have to send the stablecoin to your wallet and then use the wallet to fund the stablecoin. So we're doing something where you don't need to come back to the app. You can go to Binance or Coinbase or your Ledger or wherever your USDC is, and send it to an address that is connected to your Visa card that's in your pocket or on your phone. That use case is growing aggressively. The other one is what we call global accounts. So like freelancers, businesses. Right now we're going very hard on like some businesses in Africa where we just basically go and say, you receive money from people in the US, you receive money from people in Europe. Here is a Euro account, here is a USD account, here is a GBP account. Whenever those people are paying you, give them these accounts. They can pay you locally. So instead of me as a traveler, okay, let's not use myself. The guy just outside my office here in London, I said Jeff, who wants to go for safari, Masai Mara. instead of him going to his bank and doing a GBP transaction using Swift and whatnot, the travel agency, for example, in Nairobi, gives him a GBP account. And he sends money.
Yeah.
And that GBP account is an Eversend account, global account.
Yeah.
And the moment we receive that money as GBP, we make it available for the tours and travel company in Nairobi. But in the back, we're using stablecoins for that. The customer doesn't see the stablecoin. But within our relationships, we have a way of moving that GBP when it lands in the account into stablecoin and then making it available locally. And the tours and travel company can exchange that into KES, into UGX, into GHS, NGN, or they can even use Eversend to pay their people. We are seeing a bit of growth in that.
That's an interesting one because I was doing some work last year and I came across use case where like some of these tour and travel companies, someone sends you money like on Friday, the flight is coming on Friday night, and you need to pay for park entrance fees, you need to pay for the cab, whatever, you need to pay staff money, because it's a package trip. And you find that they struggle so much with working capital because, like, by the time we receive the $10,000 from the family that's coming for 3 days, like they've had to spend like $3,000 on upfront costs, right? And so, like,
Money they don't have.
yeah. So it's an interesting use case, and maybe there's some partnerships there that like that you could explore in terms of like now accessing that user base.
Yeah. We are actually looking at this very aggressively. And we've just hired somebody in Nairobi for this specific purpose.
Yeah.
Now, that guy, the tours and travel agency, if they wait for Swift maybe 3 days, if they pay them by card, that settlement may be minimum 5 days.
Yeah.
And there's an extra like 3.8%.
Precisely.
Yeah.
Precisely.
Yeah, and then there's an FX angle. So by the time you receive that money, 8% is gone. And sometimes people don't know this, so we really have to go in and educate. Now, with the Eversend solution I'm mentioning, the guy in New York pays you, that money comes. In fact, New York is not a good example because money in the US is not instant. But in the UK or in Europe, they pay you. You see the money when they pay you.
Yeah.
Like, in the UK here, when I send money to one account from one of my accounts to another account, before I get a confirmation on my phone this side, on the sending side, I see the money in the receiving app.
Yeah.
And that's the way it works. You will see that money when they hit send in your Eversend wallet. And then you can do whatever you want. So the problem you're mentioning, this is how we solved with the stablecoin. So that's another big one that we are seeing.
Got it. No, this it's really like, listen, I see the use cases, I see the growth. It's inevitable. You'd have to be blind not to see the growth.
Yeah.
One of the things now, like I think about long term is, if you just look at the stablecoin ecosystem for what it is, it's like 2 private companies that have issued stablecoins. And basically, like that's the majority using USDC or USDT. In Africa, it's predominantly USDT, right? The reserves, you don't really know. Like, you trust that they do attestation reports, right? You trust that those things are legit. But it's like, by the time now, like a Standard Chartered Nairobi, or like, at least the big money comes into stablecoins, because the way stablecoins are being sold is like, this is the future. But like, I struggle to accept that like a global money system will be backed by 2 private companies. I don't know. How do you think about that?
One, I used to say this like 8 months ago, and it was kind of contrarian.
Yeah.
It's not contrarian now because it's happening. So, the US, when they passed the Genius Act, they opened up an arms race in terms of financial technology companies and banks and insurance companies and anybody who is involved in these finances. What it did is that it allows anybody to issue
Stablecoins,
stablecoins.
yeah.
Now, that's one. Two, a lot of the money to be made in stablecoins is not on gas, it's not on what, it's on earnings yield on reserves. That's where the money is.
Yeah.
Now, Citibank, JP, Barclays, all these big companies are not going to use your USDC.
Yeah.
This is just the beginning.
Yeah.
They're going to issue their own stablecoin. Everybody will issue stablecoins because as long as the stablecoin is their own, they can earn yield on it. The money in yield is so much. Maybe with an African perspective, it may not make sense. But if you look at the volumes of money that someone like Citibank or JP deals with on a daily basis, and you tell them they'll make 4% per annum, the revenue is ridiculous. So everyone will become an issuer. The way we are thinking about it internally at Eversend is to make sure that our systems are interoperable.
Got it.
So we don't care if it's USDT on BEP. We don't care if it's USDC on Ethereum. We don't care if it's USDP, USDL. I don't know, PYUSD. For us, is it a dollar that we can trust? Can we trust the issuer? If we can trust the issuer, we will have it on our platform. Even our own local banks and African banks, and maybe companies like Eversend will issue their own stablecoins if there's enough volume, because that is where the revenue actually is. So on the infrastructure side, how to win is to work with different players. Now, right now, everybody uses USDC and USDT. But it's just the beginning. And maybe on that same note, something I always say, which I really think a lot of people don't understand, is with the stablecoin game, we are so early in the game that it is not even like super difficult to explain how early we are.
No,
because if you think about it, in my opinion, all the volumes of cross-border business payments will go on stablecoins, including banks going on that infra. If you think about it, card settlement will go on stablecoins. So the volume we are running now, I don't know. You can't even call it 0.0 something percent. I don't know the number, so I don't want to speculate about it. So USDC and USDT is just the beginning. And they've been around for so long, they have helped us to prove the point. And now the story is going to start changing. And a lot of banks are already issuing their own stablecoin. Standard Chartered has issued a stablecoin. I think in Hong Kong, JP Morgan has issued a stablecoin. I don't know the others. They're just, and small companies will issue their own stablecoins. Small companies like Eversend will issue their own stablecoins because the amount of money to be made is extreme on yield.
No, it's an interesting point. It's kind of like the view I've also had, but and I'll throw this back at you. Like, there's the Bank of International Settlements. I think they're working on something called mBridge, which is like effectively like a CBDC, kind of like interoperability system that enables like, money to move from, let's say, the Chinese CBDC to the Indian CBDC or something like that. If you think about it, right, and again, just like look at logic and how financial systems evolve, right? Even in the beginning, like banks were issuing their own money until you had like a central bank, and forget about the philosophical or political stuff about whether you believe in central banking or not. Just like every country has a central bank now, and you can't escape that fact. And they're the ones who issue fiat, right? So you're gonna have a situation where like you're right. These guys are just checking the market. They're like, okay, this works. Then it's like, now it's time for the big folks to come and take over. And then JP Morgan issue a coin, Goldman Sachs issue a coin, Citi, Standard issue a coin. They'll likely come up with like a chain that helps like cross whatever that has like shared ownership, because that's how financial systems work. Like there's always shared infrastructure, and I see the same thing happening when it comes to stablecoins. But there's so many people dunking on the mBridge CBDC, but like theoretically, they're doing the right thing. Like what do you make of that?
Yeah. One, I don't like to rely or involve governments or regulators in the actual implementation of these things.
Yeah.
But they have seen a need. And I think if you think about it, it's just going away from these specific per country CBDCs to giving them a bridge where they can talk to each other.
Yeah.
That's fantastic.
Yeah.
Politically, there may be issues here and there. Like one of the things we have with stablecoins, which we are like seriously thinking about, is the dollarization of different countries. So if they can manage the switching and all that, I think it's a brilliant idea. And removes a lot of the friction.
Yeah.
But I think my own opinion is that CBDCs themselves are not the way we will end up running payments, but to be more privately issued stablecoins that actually conform to the regulations that
100%.
the regulators want.
100%.
Yeah, so that bridge, like I said, within our own ecosystem, saying that we can just bridge all of them, I think is really how I see the future. And I think sometimes maybe we complicate stablecoins a little bit. I like to say that stablecoins is basically e-money, nothing else.
Precisely.
Yeah, it's M-Pesa, but with a global ability to move. Instead of moving on Safaricom's ledger, it's moving on a blockchain ledger.
Precisely.
And this is the conversation we are having with regulators when we go and speak to them. And we say, if you can give us an e-money license, why not allow us to issue a stablecoin? Because by allowing us e-money, you've essentially allowed us to issue a stablecoin. It's just that it's not on the blockchain. And it's not that complicated if you think about it like that. By allowing us to generate money and put it on people's wallets and checking us, so that you make sure that when we generate the money in the wallets, we also make sure that money exists somewhere in a bank account or some kind of treasury. Then essentially that's what a stablecoin is. It will just be in US dollars. Now we will have UGX. We already have the Nigerian one, CNGN. We will have a Kenyan one, but that's essentially what it is. And I think there's a real threat there for some of our friends at the telcos. Because it opens everything.
They'll find themselves like a small corner of a changing financial system. Because you're right, like listen, and maybe the thing with CBDCs is that you don't actually need to create CBDCs because you've already proven how it works. Like the way money works right now is that you give banks the ability to issue money, but you just control how they do it, right? So if you have like central banks that say, okay, we've opened a stablecoin mandate and these are the rules, like we've seen in the Genius Act, but like there's some kind of like central bank reporting, which I think already exists, then effectively you're creating the system now with stablecoins as opposed to traditional money.
The same way M-Pesa reports for their e-money, because M-Pesa is basically e-money. MTN Mobile Money is e-money. It's the license that we have here in the UK that is called EMI. e-money license. It's the same one that we, for example, are getting in Uganda for. It's easier to turn it into a stablecoin than to build a CBDC because this is already happening.
Exactly.
M-Pesa is already a stablecoin that is on a different ledger. What makes it a stablecoin is putting it on a blockchain ledger. So the CBDCs have a bigger problem. There's trust, government trust, which is one of the reasons we like cash. For example, if I hand you cash, Samora, nobody knows I've paid you cash. If I pay you with a CBDC, then everybody at the central bank can say, "Oh, Stone, why did you pay Samora?"
Exactly.
So CBDCs are not easy to.
They're hard to sell. They're hard to sell, especially in Africa.
The population.
They're like, now with all the taxes and everything, the last thing I want is like all this visibility on my money. You're right.
Exactly. Yeah. So I think this private stablecoins is going to be the future.
And that means like the way the next years evolve is like, right now stablecoins is like like 5% of Swift volumes or something like that. I don't know the exact numbers. I'm just making something up.
Yeah, it must be much smaller.
Yeah, but with each year you're like just taking a chunk, and then at some point you start seeing like a hockey stick, right? Like once the banks come in the game, and like all of a sudden JP Morgan stablecoin is able to communicate with ICBC China stablecoin. That's when now you start seeing like hockey stick growth in terms of like, because that's what's going to be needed for like a, I don't know, like I'm just thinking of a large corporate like Safaricom making $100 million supplier payments to China. Like they'll need those trusted intermediaries, and when that starts now moving like on chain, that's when now the game is really over. Because I think, as you're saying it, like Swift is a messaging innovation in the world of APIs. Like Swift messages are kind of like an old idea. Like there's better ways to send communication, and now there's better ways to settle. So I can see how it's working.
And they're also getting better. I think what we see is, I think, like for me being in the industry, looking at the last 5 years, there's a massive improvement in Swift.
100%.
Big.
Yeah.
These days you can really get your Swift transaction much faster. But the way I look at it is that it's initially for a very long time it's going to be hybrid. So Swift will sit hand in hand with stablecoin rails for some time, and the volumes will just keep accruing.
Yeah.
Like you said, until we have a hockey stick. Yeah. But in my head, the way I look at it, it's not war like with banks or what. We have to work together. It's how do we bring this infrastructure so the banks can utilize it and the customer wins at the end of the day. Reduce dependency on correspondent banking. Even the banks don't like it. Like you said, a small bank in Nairobi or in Kampala or in Accra does not like correspondent banking. It's just stressful.
It's a mess.
Yeah.
And just as we're winding up, like, what are your priorities, like as Eversend? What are your core metrics you're looking at in the next year or two? What are the one or two things that you're really focusing on?
So our B2C app is a good way to know what's going on in the market. We serve good customers. We will continue innovating on that side, and it's what we use to kind of test out all the infrastructure that we build. So we'll just keep innovating there. We are introducing new global accounts. So right now we have US dollar global accounts. We have Euro global accounts. In a few weeks, we'll introduce pounds, GBP, with Brazil and Mexico. Kind of think outside Africa. While we build that infrastructure, we also make it available on our full API suite. So that's how we're moving. In terms of like major focus is that we really want to sell the B2B side of the business because there's a massive opportunity there. So for us, it's the same products. It's just how you sell it. So
Got it.
it's global accounts, it's cross-border movement of money, it is stablecoin cards together with a partnership that we have with Stripe. It is selling our API suite to big players. So banks, big companies, payroll companies, software companies, people who want to collect money out of Africa, people who want to pay money into Africa, and people who want to exchange with African currencies. And then later, as we move this year, we will probably be in, for sure, in South America. We're already working on this.
Yeah.
And then we're looking at Southeast Asia as well.
Got it. No, really well done. I mean, I've admired your journey. You're one of the few CEOs who's like an operator and a thought leader at the same time. It seems like, you either choose one, either an operator or a thought leader. And so it's good to see someone who can balance both. And you've done really well. Navigating this transition from B2C to B2B is not easy as well. So, well done on that. And thanks for sharing your insights with us, man. Really appreciate it.
Cheers. Thanks for having me.
Yeah, thanks.